You are hearing your opening bell on Wall Street for this Thursday morning, looking at live images from the New York Stock Exchange and the NASDAQ here. Really interesting to see what's happening in markets today, given that the big tech names, maybe they're getting their mojo back. It's certainly what we're seeing in the trade this morning. Let's take a look at the major averages here. You are starting to see these major averages pop up on our screen here. You've got your S&P 500 up nearly 1%, actually coming off its highs before the opening bell. Maybe those jobless claims coming in a touch higher than expected. Weighing on sentiment just a touch, though, of course, it will take a good day after so much volatility. And really quickly want to take a look at some of the sector action here. When you think about the fact that we have had so much volatility on those tech names, take a look at your XLK up over 2% here. And if I can broaden it out just a touch, take a look over the past month. You can see that we have still had some movement to the upside in some of that tech activity, even though tech has been under so much pressure over the course of the past quarter, given some of the volatility with regards to the trade war. So let's get it over to Yahoo Finance's Jared Blickery for a broader look at what's moving. Hey, Jared.
Well, thank you, Maddie. I'm going to start off by saying NASDAQ really surprised me last month. April was down 12% in NASDAQ, closed in the green. I'll just show you that 1 month chart real quickly. And there you go, 2.02% over the trailing month right now. And then the Dow and the S&P 500 are heading for their first 8-day winning streak since last year. I think it was August for the S&P and September for the Dow. But I want to take a little bit of a longer-term view here in the S&P 500. This is a year-to-date chart, and I've been posting this just about every day. I want to highlight that we are now seemingly comfortably entering this area of price memory that we had way back in March. So really the markets and the traders have to get beyond these levels here and punch above it in order to have a shot at reclaiming those highs. But anything can happen in this area, so there's still a little bit of work to be done. Notwithstanding that, we have a lot of bullish developments here. The VIX is dropping to a 4-week low. This is, again, a year-to-date chart, and we can see right there, not a big movement today, but I think traders will welcome that sign, still hovering above the 20 level at 24, so some work to be done there. But not a lot happening in bond or dollar land, so I'm going to move on again to the sectors. This is XLK here. That's the tech sector that is leading up 2.21%, the best day in a week. And we are not surprised to see that. Guess who's leading it? That is Microsoft. Microsoft on the upper left there, largest stock in the public universe here on planet Earth. That is up 10% today. NVIDIA up 4%, Meta off of its earnings up 5%. For Microsoft and Meta, these are the best days in 3 weeks. You have to go back all the way to that Trump announcement of the tariff detente on April 9th to find a better day. And it's going to be difficult to find a better day than that for a while. Want to point out, too, that software and disruption are leading the tech sphere today. This is my leaders board, and we can see MAGs. At the MAG 7, that's up almost 4%. Then we have Bitcoin also following. Software, that's a Microsoft play, that's up 2%. And also ARK Investment Fund. Want to point out that I'm going to show my heat map of some of these components here. Tesla just swung into the green. It was in the negative just prior to the market open. And you're seeing a lot of green here in disruption. Not so much in the, we have a lot of green in the semi space, and NVIDIA leading there in Taiwan Semi, but a little bit of red. So software and disruption really leading the way there. Notwithstanding all this green, I feel the need to point out a couple things in futures land. We have crude oil that has now hit the second lowest level. $58.12 is where it is right now. It hit 56 and change. That's the lowest level in 4 years. You'd have to go all the way back to about January, February of 2021 to find a lower level. That speaks to the demand picture globally, and I don't know quite what to make of it right now, but that's something I'm definitely going to keep my eyes on. Then I also want to point out that gold and silver, this is a 6-year chart. I'm going to punch this down to an intraday. Gold and silver having their worst day in a couple of weeks there. Is the rally in gold and silver over? By no means. I don't see anything in the technicals here that see extended weakness, but just a little bit of a bad day for the precious metals. And I'll send it back to you guys.
All right, Jared, I'll add one more to you. The best month-to-date performance for Berkshire Hathaway of all time over the course of the last month. Thank you so much, Jared. Let's get to a stock moving at the market open this morning. Eli Lilly here, taking a look at shares down over 7.5% after the company cut its profit outlook, despite topping first quarter estimates as demand for the company's weight loss drugs surged. Yahoo Finance senior health reporter Anjali Kamlani is here now with a closer look at the results. Anj, what do we know?
Yeah, so what's pressuring the stock actually isn't that profit cut. We do know that it came from a slightly higher tax rate for the year that the company announced. They did reaffirm their guidance. I want to point that out. Take a look at the numbers really quickly on your screen, beating those estimates handily. And then let's go into the topic of the day, which is their GLP-1 drugs. When you think about Lilly, of course, we can't miss that. And those also came in ahead of estimates, moderately so. And that's a little bit where the pressure is coming from. Even though Zepbound, that's the weight loss drug, has taken the lead over competitor Novo Nordisk Wegovy, we have seen some concerning news this morning that is possibly the reason for pressuring the stock. And that is a deal between Novo Nordisk and CVS. Those two companies came up with a deal that puts Novo Nordisk Wegovy on CVS's formulary as a preferred weight loss drug and excluding Zepbound. And that comes just as Zepbound took the lead in terms of weekly prescriptions in the recent past. I had a chance to speak to Eli Lilly CEO David Ricks, and he told me that on the news of this deal, the company isn't really looking at it. He said it feels a little bit like last decade. These lockup deals, we're not interested in exclusive deals. And that's in part because he signaled to me that the company isn't thinking just about these two drugs anymore. They're already moving on to the new generation of the drugs, as well as that pill form. Lilly now in the lead for getting first to market after Pfizer dropped out of the race earlier this month. So that's where his focus is. Meanwhile, I also had a chance to talk about the tariffs and how the company's thinking about that. Both CFO and CEO told me that they're already planning for potential. It's already built into the guidance. And specifically, if the goal, quote, is to repatriate the supply chain, I would say probably the threat of tariffs has already done that. Declare victory and move on would be my advice, is what Rick said. Talking about how, the companies, we've seen a large number of companies announce major moves and major manufacturing commitments to the tune of billions of dollars. Eli Lilly itself announcing $27 billion in additional to take the total number to about $50 billion since 2020. So that's a lot of where the move is coming from. And yet still, despite all these positives, you look on your screen, you can see Lilly sinking right now. We'll have to see if Ricks can talk to investors later today and really get a move on that stock.
Anjali, thanks so much. Breaking these down, some big deals this week that have come forward, especially considering Wegovy just had another one with Hims & Hers.
That's right. They're ramping up their telehealth, yeah.
Much appreciated. Time now for today's strategy session. In the latest sign of economic trouble, weekly jobless claims surged to 241,000. That's more than expected and pushing bond yields lower. Treasury Secretary Scott Bessent saying shorter-term treasuries like the 2-year are signaling to the Fed that it's time to cut. Joining us now is Brij Khurana, who is the Wellington Management Fixed Income Portfolio Manager. Great to have you here with us in the studio. Okay, so first, let's just start on the comments from Treasury Secretary Bessent, because they have been putting a lot of pressure on the Fed to cut rates right now From what they're seeing in the 2 years, does that, from your perspective, also signal to the Fed that it's time to cut?
So, whether or not it's time to cut or not, I think the Fed is probably going to be very resistant to cutting in the next few meetings. And so the market's pricing the Fed at about 60% chance of a cut in June. And, I think that's much too high because this is a Fed that, we'll remember, is data dependent. And the data is going to look pretty good over the next few months because we front run so much spending from tariffs. And I think the second reason is that, the Fed wants to see the impact that the tariffs are going to have, the immigration policies on growth and